7th floor.
We'll see you around the timeline. Feels good to be back.
I think the Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm with Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
People from all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming. They're simply here. It's the golden age of crypto, guys. Get right. Let's go.
Welcome to the nest. See you on the show.
Ladies and gentlemen, welcome back to the Rollup. It is Thursday, March 26th in the Tokenization Tower. It is 60 degrees outside. Yes, sir, Rob.
Tokenization Tower. I'm in the nest. It feels good. I'm wearing a suit, and we are coming off of 2 days Digital Asset Summit.
Baby. My God. Holy mackerel.
Yeah, that was a whirlwind.
I mean, Dash just felt bullish. Like all in all, just felt like a bull market conference. Day 3 is still going on today.
Yeah.
I mean, it felt like we were in the midst of a tokenization institutional, partner logo by logo partnership era. It just was bullish.
So obviously we were slammed. I think we had 15 guests yesterday.
No way.
The likes of
15
somewhere between 12 and 15 guests. We had KPMG, we had Chainlink, we had Santiago Santos, we had Franklin Templeton Ondo, the Solana Policy Institute, Framework Ventures, yada, yada, yada. So obviously we were super slammed. And then we came straight to the tokenization tower for the grand opening of the Nest. We had a bit of a party.
Oh, did we ever? We had we had 800 people sign up. I think we accepted like a couple hundred.
Yeah. Plume team was phenomenal. Momentum X. Shout out to all of the partners. We had Magic, we had Theo, we had S&P Global, which was an incredible partner, and I think just a sign of the times as far as where we are in the industry today.
That was kind of like a full circle moment. We're hosting an event, and the company behind the S&P 500 is a partner of it.
Yeah, pretty incredible. In case you had any other takeaways, but we were caught up in the whirlwind. We went straight from DAS to, the tower here to start setting up for the event. Yeah. I didn't get a chance to talk to you about your Neo Finance panel.
It was good, man. It was the end of the day. All the hosts just wanted to kind of have fun.
Yeah.
So I asked them some spicy questions. Just kind of had some fun with them, honestly. I should have asked the Circle representative some more spicy questions. I got to ask the Solana people about Hyperliquid. I got to ask Invesco people what makes them better than anyone else to support Superstate. And then I almost asked the Robinhood lady about Coinbase, but didn't get to that either. But yeah, I mean, they get it. They're the representation of it, right? So,
of Neo Finance.
Yeah.
Yeah. It pretty incredible. While you were on stage with Invesco and Robinhood and Circle, I was chatting with our friends at Framework who announced $1 billion, placement into 8 companies as part of their initial OBEX cohort. And Framework's been super supportive of the Neo Finance thesis as well. And I think a lot of the teams that were announced as part of that cohort also belong just firmly at the center of Neo Finance. So Securitize was part of that cohort as well as Centrifuge. They had a public company called Better Home that's doing mortgages. And then that kind of front ran the announcement today, I don't know if you saw this, of Fannie Mae talking about crypto-backed home mortgages. So
I did see that. I put out a tweet. I was like, is this really a bear market?
It's just so insane that we're going to collateralize all of these assets. And then, to me, that is the extension of credit. You no longer have to... One, you don't have to take out a loan on chain. Maybe Fannie Mae comes on chain. I mean, people were taking out loans for houses on Curve, and Curve founder was famous for that. But I'm sure when people wanted to diversify into real estate or purchase a home, they would sell their crypto. They don't have to do that anymore.
Yeah, and also lowering the cost of HELOCs was something that we heard yesterday with bringing them on chain. And
Santi was super bullish around Mike from Figure and their entire HELOC product.
Yeah, guys. So let's get into today's topics. We have Plume, of course. We're here in the Nest by Plume. Ladies and gentlemen, the core of this entire show, the Tokenization Tower. The Nest is also the name of one of Plume's awesome vaults and their vault product. Guys, check that out. We're going to get into today's topics, and then we've got Sam from Frax ready to go as today's stabled up. Welcome back to Tokenization Tower, guys.
If you guys missed this event last night, it was absolutely insane.
That's probably why we're a little slow today.
We had so many people hitting us up. So the flow is basically you walk into the Empire State Building. I don't think anyone's ever held a crypto event here ever before.
Yeah.
There's obviously been financial and different things, but this, I think, was the first crypto event at the Empire State Building, hosted by the Rollup, Plume, and all of our amazing partners. So you walk in, we had the lovely Emily from Momentum X greeting people at the front desk, and then we had Atan, walking people up the elevator. So it was incredible. The vibes were immaculate. Initially, the Empire State was like, "Hey, you have a little too many people coming to this event," so we were a little bit unsure about how things were going to go. What's that?
We didn't even accept that many people. The
And we
signups was
accepted-
insane.
Yeah.
That was also another tell of the state of the demand of this institutional era. Is just like these events are absolutely filled.
Yeah.
Like, I saw this massive line at a Canton event.
Yeah.
Yeah, I mean, we had a couple hundred people flow in and out of here. We had an Empire State fire warden walking around.
We had the security
He was
guard.
having a sandwich.
We had so a little bit of data from the Lumo. We had 70% of attendees that signed up that got accepted attend.
Really?
That checked in.
I mean, come on, who doesn't want to know the Empire State?
Of course, right? I mean, but you know the typical attrition rate at these crypto events is 25%.
30%. Yeah.
3 times that at this event. So
It was fun.
Shout out to
We'll have
everyone
do it again.
who
I think
came.
we'll do this probably once a month. I mean, this is a big one. It's DAS. It's like
Opening.
the thing. Yeah, like the opening. But there's gonna be more of those guys. So looking
And I think
forward to seeing you guys
do
there.
different varieties of them. This was obviously kind of more of like a party event, happy hour type of vibe.
Yeah.
A lot of networking. I mean, people were coming up to me saying, "I just met this guy, I just met that guy. I think we're gonna work together," which to me provides just a lot of like I'm just really glad that we're able to do that. One of the things that I find the most fulfilling is when we're able to bring people together. They're able to find value in one another. But I think we're going to mix up the style a little bit. We'll do, some different educational style things. We'll do more networking things, more happy hour things. So plenty more to come
party,
from
guys. We've got markets and weather from the Empire State. We got Stabled Up with Frax's founder talking clarity, talking stablecoin. Frax's founder, Sam, was one of the core components of the Genius Act initially, kind of getting it through its early stages.
Yeah. And obviously we have, the most recent debacle, people calling it a resolution. The politicians are calling it a resolution, but from the crypto angle, it feels more like a debacle. The politicians sold this out. They basically put something forth in front of the banks that said no yield on stable coins. And crypto's looking around like, wait, what? I thought, we were on the same team here. So I'm very curious to hear what Sam has to say about this and how this is going to shake out, because I have a feeling Brian from Coinbase is not going to sign this, and I'm curious how Sam from Frax
Yeah,
feels
and
about
also
it.
Miller, Whitehouse, Levine from SPI yesterday said that they're actually trying to go back and change the Genius Act in some way, which I found can be quite interesting and a little bit weird.
Essentially, that I don't think they're going to go back and change the Genius Act because it's enacted into law. But I think what Miller was saying was that the banks were caught off guard. They were flat-footed. They did not see the yield
Yeah, they weren't paying attention.
language. They weren't paying attention when the Genius Act was passed. Then they realized, oh wait, this is a serious risk to our business. Now they're holding clarity up and they're using it as leverage because they need to fix this yield issue. And they can't go back and change the law that's already passed. They have to try to fix the issue in the new law that's going to be proposed. And then that would obviously update the entire legislature around yield on stablecoins as it becomes more and more updated. So that is the main contention that the banks have. They didn't see it. They were caught off guard. They just missed it when the Genius Act passed. So now they're trying to correct their position.
Then we've got Grayscale, head of research on the show. We've got Hyperliquid's strategy CEO as well. It should be a full
Schamis.
slate, guys. Today's topic's powered by Trezor,
As
one of
always.
the best hardware wallets on the markets, guys.
Yeah.
Go ahead and use code Rollup10 to get a Trezor at Trezor.io, guys. We're going to roll into our first guest. We're going to take a super quick break. We're going to bring him up and get this show on the road, guys. Let's take a quick pause and we'll be right back.
Welcome back to another episode of Stabled Up, our premier weekly show covering the ins and outs of digital dollars, stablecoins, and the future of decentralized finance.
The show is made possible by Frax, and Frax is powering the financial engine of the internet, powering FRX USD and Genius compliant stablecoins. This is the stablecoin super cycle made possible by Frax. Now enjoy Stabled Up, our weekly stablecoin show.
Alrighty, guys, welcome back to Stabled Up, episode number 25, powered by our friends over at Frax with their Genius-compatible stablecoin FRX USD. We've got none other than the Frax founder himself, Sam, here with us. A lot to talk about. This entire Clarity structure, Coinbase. We were just in DC. There's a lot going on, Rob. Sam, it's great to have you back. How you doing, man?
I'm doing great, thanks. It's been a while. So you guys are doing the DC circuit this time, huh?
Yes,
yeah,
sir.
we did last week.
We were in DC last week, DAS this week, so I got a suit on and he's got a button down on. We miss you, man.
Yeah, no, it's you guys get the baton handoff. I was just thinking the other day that like for Genius, I basically like lived in DC in like March last year, and now there's a lot of exciting stuff in Frax that we're building in stealth, and just in the lab, so to speak, and eventually the baton will get handed off to me too. But you guys are holding down the fort.
Well, Sam, you laid the groundwork so that we could go there, and we had plenty of material to cover. Obviously, the latest is that we had the latest resolution or debacle. I was saying just before you joined that it feels almost like the politicians sold it. And I'm curious how you're seeing this. To me, it feels like the politicians sold us out. They said, hey, we have this great resolution on yield as it pertains to Clarity. The great resolution is that there's no yield on stablecoins. Don't you guys love that? But this doesn't feel like a resolution. It just feels like the banks won and no crypto founders are going to sign off on this. Is that the right way to think about it? How are you reacting to the latest resolution, air quotes, coming out of DC?
Yeah, so I'm following it pretty closely, but one thing to put in context, honestly, though, for people that aren't really thinking about it, is this is pure politics, right? So this is not going to stop with this yield thing or even after Clarity. And what I mean by that is like, I don't know if most people watching this are Americans or not, but like, there's the Second Amendment in America, the right to bear arms. And for example, the right to bear arms thing is always going back and forth between people on the side. It's not like, oh, this one act passed and now everyone's done talking about it, right? That's why there's like these lobbying groups on both sides. No matter what you think about the Second Amendment and stuff like that, I'm myself slightly pro for it and things like that. But regardless, whatever you think, right? So one thing is like they pass it that says, oh, you can't have magazines for like guns that are above this, right? And then if it's passed, the next one they'll be like, oh, you can't have guns that are this long, right? And then it's like, then you can't have guns that look like this. And so it slightly goes forward and forward. And so that's just how politics is. It's not about like stablecoin yield and all this stuff. The main thing with this is it follows the same pattern. So with Genius, it was almost a resounding victory, thankfully last year, where the only compromise was the issuer could not give a certain like legal claim or expectation that you holding this Genius like compliant stablecoin, like ours, like Circle's eventually going to be in all of these like PYUSD and stuff. The issuer could not say that holding this thing gives you some kind of legal right or expectation, which is fine. Like very, very few issuers were going to straight up say that, but you could give it to a distributor, right? Like a centralized exchange partner stuff and have them give and distribute yields. Now, this is actually, that's essentially, if this is the current wording, right? That's essentially kind of banned. You'll have like certain things where it's like, activity-based kind of things where Coinbase will have to think about, they can't say USDC like earn, but by holding they'll have to say like, but if you log in and like make a trade or something like that. And the architecture of it is important to realize. After this, let's say this does pass like this, which is not good. I hope it doesn't pass, but if it does, then in a different administration or like a different SEC like thing, right? If it's not like pro crypto, then they'll be like, by the way, by activity, we're releasing guidance where activity means that you can't do an unsubstantive economic reality. They'll basically say you can't do like logging into the thing, or you can't do like this or that or whatever. And so I think people need to understand. That's why I was saying you guys can pass me the baton hopefully later. Is like, this is not going to end in some kind of, I think the crypto industry is kind of they're not politicians, or they're not like used to the fact that this stuff is part of, politics is an ongoing process, not a one and done thing. And so I think ideally this is not the final wording, but to be honest, it's really good for DeFi strong stablecoin teams like Frax, and not that great for ones like Coinbase and USDC's like Earn program and stuff that are constricted a little bit more. And in fact, like, I think the two biggest winners, other than in this wording, probably the banking lobby, right, would be Tether, right? Because Tether's crushing it, and they don't pay yield historically, and now it got harder for their competitors to pay it in an open-ended fashion. And then also DeFi strong teams that have Genius compatible stablecoins like Frax USD, where we actually have these partnerships where if you peg to Frax USD and Curve Peg Keeper pools, we have this big thing coming up with Aave V4 that's launching next week, where we stream the actual risk-free yield as like a base of the floor of it. And so Frax USD is going to be one of these big base hub blending and borrow assets and things like that. And I think that benefits us a lot, because we already do activity-based risk-free yield streaming, but it's not the best wording, that's for sure.
Yeah. So you're pretty confident then that because it's just kind of like an evolution of politics in this way, that's just gonna, they're just gonna keep inching until they take a full mile. Are you confident then that Brian Armstrong from Coinbase's side is going to hold off on getting this through? Because, right, we had a conversation with the CEO of Solana Policy Institute, and basically he was saying, look, at some point we're gonna have to accept a trade-off, either trying to get this done before kind of like July-ish, because all of Congress is gonna go out and kind of do their whole, run around for their next elections. So we either need to get this done and make a compromise sooner, or it's gonna get pushed back all the way into later in 2027, likely. So do you think that Brian is going to try to get this through quickly, or push back? I think some news just came out that he's not going to, and Coinbase is going to oppose this.
He was in opposition to it, which is, I think, expected. And maybe just, a similar question in different words is, does Brian even have the power to sign off on this? Because my understanding is that he doesn't, right? It's mostly the politicians that can push this through regardless of what crypto industry thinks about it. They just don't want to piss off their donors. Obviously, they have donors on the banking side and they have donors on the crypto side. So they don't want to piss anyone off. But if push comes to shove and the politicians are getting a lot more donations from one side than the other, they'll just go ahead and push something through.
Yeah, I think so. I don't know exactly how hard Brian can push, but he is a big guy. He is the elephant in the room from the crypto side. But it's funny because I think everyone in the crypto industry is discovering what like pork is, and like an omnibus bill is, like, which is like this huge bill, and then pork means like small things added to it, whether it's for spending or other things. And like this yield clause, by the way, is an amendment to the Genius Act. So it's literally by definition, I don't know if it's by definition pork, because I think it has to have additional spending in it, but it's literally like an additional thing in there, right? In a huge clarity act, kind of like an omnibus bill of sorts. And so I think the best thing to do is to kind of take the half W half L on the yield stuff and just pass the Clarity Act, because it is a huge bill that there's a lot of other, obviously there's a lot of other problems that could be like perfected, but again, politics is all of this stuff. You can never get everything you want. The Genius Act was close. The Genius Act was very, very, very close to as perfect as you could possibly get, which is why they're trying to amend it and things like that. But based on midterms and, who knows what's going on with all this like macro war and stuff like that, I think it's very, very unpredictable if this doesn't get passed by July, like you said, like recess, which is the same thing with Genius last year, right? They were trying to pass it. It got passed in July, right? So I think this is probably the last or second to last revision. I hope it's a little bit better. But again, it's really good for DeFi strong teams. So we're pretty excited about it at Frax, regardless if they can just pass the Clarity Act. This is our bread and butter, right? Bringing risk-free yield in a safe stablecoin in the most important hubs on-chain, in Curve, PegKeeper pools, AMMs, in Aave, lending, in important places. And also, the other good thing about it is it's activity-based rewards, right? And so one thing is that you can also just give these rewards away in loaded in cards, like Frax USD's on EtherFi, right? These EtherFi cards that are really, really hot. And so, for example, you can have a system where you load a bunch of, Genius compliant stablecoin, and we calculate a proprietary, algorithm based on like the swipe, last time of swipe, so like activity, and then also some integer of like obviously how much you have in like credit or debit on the card, which is another way to say the balance and like the time factor of it. And what's interesting by this is actually if you pay out in cash, essentially the accumulated yield, it's not a taxable event, right? And so like the IRS has already said stuff like cash back rewards, right? Like people don't put their cash back rebates from their cards in their IRS annual tax returns, right? Because the IRS has said these are cash rebates. They're not income. They're not actually new income. And so in a funny way, smart, good DeFi integrated, neobank integrated teams can actually turn this activity-based requirement. It would have been better if it wasn't a requirement, if we could have just done it optionally, obviously, right? But this activity-based requirement into a new product where you get essentially risk-free yield that's tax-free and not actually like a dividend of sorts.
And the EtherFi cards you guys are working on, that's an example of how you could structure this so that it is legally compliant and also beneficial to the end customer?
Exactly. It's actually already out. If you have an EtherFi card, the EtherFi guys are amazing. They already integrate Frax USD spend, the risk-free rates distributed daily based on activity, holdings, an entire kind of proprietary algorithm. And so you can go and try it. Exactly. And it's tax-free.
Very cool.
Yeah.
If you're American, I don't know, different places, different tax.
Yeah. I'm curious, you mentioned the Genius Act, it was essentially perfect. Why do you think the banks let it slide through so unwittingly?
Yeah. Like, why are they not paying attention?
No. They were paying attention. As someone that was in DC and stuff, they were definitely paying attention, but they were really caught off guard with how fast everything happened with like the November election, and then like everyone being pro crypto super duper fast, and then this getting out the door even faster than other people thought, and like Senator Loomis and Senator Haggerty, the two authors of the bill, being so great and such great allies of the crypto industry. And so they did try for sure. I can assure you that. But now they want to push it's politics, right? They want to push the envelope here. And I always said it always just is about what layer the yield will get distributed. Once the Genius Act passed, the cat is out of the bag. Stable coins that are Genius compatible, compliant, these safe stable coins, they exist. They're going to be used in really big places. We have announcements coming. Everyone is doing something really big with institutional and large companies basically every week or two. And so It's just a matter of how. How is it? What layer is the yield going to be allowed to be distributed, and who benefits the most from who knows how to distribute it the best in those layers? Is it clunky? Is it smooth? Is it this team knows the best about it? Stuff like that.
Yeah. Sim, I only have one more thing on the Genius Act, Clarity Act, all this legislation going through DC, which is that, I think you're of the position here that the Clarity Act, we should just push it through. The yield compromise is something that we can compromise. And, the DeFi protocols at large stand to benefit from Clarity going through because we can strategically, curate these products in such a way that everyone ends up winning in the industry. I guess the counterpoint here is that we have guidance from the SEC and the CFTC now that effectively puts classifications and market structure around the industry, digital securities, digital commodities, some more classifications there, as well as stablecoins as a carve out. Paul Atkins, Mike Seelig are also talking about this innovation exemption. That sounds really exciting. I'm really curious to see what comes out of that. The main thing and reason, I guess, that we need clarity is just to instantiate that into law in case there's a new SEC chair, new CFTC chair that, just issues different guidance. But if we can just issue amendments like we're doing to the Genius Act, if we can just do, issue amendments to new laws and it's just that easy to switch guidance and amendments like that, is it really how crucial is it that we get Clarity Act versus, how far along the line does the recent SEC CFTC guidance get us?
Yeah, I mean, well, that's why we have politics and administrations coming in and out of the U.S. every 4 to 8 years, right? So it's like the guidance from Chair Atkins is fantastic. It's great. The reason, by the way, that the prior chair, who shall not be named, it did not ever give any guidance is he was smart. He understood how politics works, right? He knew if you said ICOs are securities offerings, everyone would say, oh, we're not doing an ICO, we're doing a points program, totally different. And then if he said, well, actually points programs are, they're securities offerings too because of expectation, economic reality, yada, 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 then someone would say, oh, well, we're not actually doing points program, we're doing a mystery airdrop rewards system of blah, blah, blah. And then if he said, blah, you guys get the politics of it. And it's really just how easy it is to change. Obviously, legislation and amendments are the hardest, which is why this is really hard for the banks to get through. And I think to be fair, there's a lot of stuff in Clarity that could be better again, right? But like especially some clauses with DeFi and things like that. But it is clearly a pro-crypto bill, all things considered, right? And we have probably a little bit of time to continue to adjust some wording on yield and maybe a little bit of other stuff. But it's a pro-crypto bill. It's a pro-crypto bill. It makes it harder for people that politically don't agree with crypto's use cases and ethos to just issue different guidance or remove guidance or things like that. So we should definitely pass it for sure. And it won't be the final thing. And I'm not saying there will be like a different crypto act. That's not at all what I'm saying. What I'm saying is there will be slightly different things that, going back to when I first came on, other people will have to get the baton passed to them in 2027. This is not like a single thing. It's a big milestone, obviously, like Genius and things like that. But in 2027, there will be like, other amendments proposed in like the spending bill and, God knows how much the spending bill will be with these wars and conflicts and stuff like that. There has to be a lot of, eyes still on the prize and make sure that none of this stuff changes. But the Clarity Act should hopefully get passed. I'm very pro passing it.
Would you say that the Clarity Act passing, as you say earlier, with Tether and Paolo, what he's doing is a big beneficiary here. They also made an announcement that they're hiring a big four auditing company to audit their reserves and their backing and all of that. Would you say that Circle's kind of regulatory arbitrage or their edge will be eroded away as regulatory clarity becomes clear? Or like, what should we actually look for in this bill getting through Tether's audit to like understand how the dynamics between Tether and Circle will change?
I think Tether's a big winner, along with like Frax and DeFi. And Tether for different reasons, but like Tether because they never pay yield, which is their benefit, their strength, and it's very hard for their primary competitor now to pay yield in the way that they're good at, like off-chain distributor agreements and stuff, at least in this wording. Tether's doing great, obviously, right? Like no one needs to say it. But one of the things that I think is really interesting is, and we're seeing this a lot, like we're talking to a lot of banks, a lot of new banks like Erebor. Everyone's heard of Palmer's bank and those guys. And what I think is going to happen is we're going to open our eyes kind of in 6 to 12 months from now. And there's going to be a lot of banks, a lot of huge companies and Visa and all of these things that are going to natively accept a short list of Genius compliant or just like, stable coins that are safe and stuff or known like USDT and stuff, but a short list of them as actual deposits and cash equivalents. Like we're going to wake up in like, 2027, June or whatever. And it's going to be like, oh, holy crap. I can just send Frax USD or USDT or USDC or something, to my Wells Fargo account. And I can say this from the conversations that we're having, without naming names and stuff, but this is going to happen quickly. And then when that happens, I think that's when you have this step function of the stablecoin market cap going from like, what is it right now, 190 or 200 billion or something to like 500 billion in like a matter of like 3 to 6 months. These things are always like that, right? They're like this, they're like this, they're like this, and then they're like up and then like a step function. And so I think these are the things that are silently happening, that they don't immediately have a feedback loop. But when you open your eyes and you can like buy real estate just literally by sending it to like the real estate escrow company and then they send it to your bank, or like you can buy like things just by literally sending it to the banking or the card layer rather than download this like spendable card and then it's super cool and then like but the merchant doesn't do the point of sale thing with Wallet Connect and it's not compatible yet. Forget those. Like those things will all slowly mature, but then there will be an inflection point where just a short list of stablecoins will be real money. Those will grow. At least that's how I'm thinking about it. Those will grow like 15x in like overnight by like in like 3 to 4 months period once those conditions are ready. That's how I think things will go. It won't be super fast right now. It won't be like super quickly on this stuff until those conditions are met essentially.
Yeah. And Sam, you've talked about the DeFi layer on top of the stablecoin layer and how, Frax is positioned for that. As you're thinking through banks and the typical banking and payment layers starting to accept more stablecoins, especially these Genius compatible stablecoins, do they hold those on their balance sheet? How do they deploy those? What does the banking and the regulated DeFi landscape on top of stablecoins look like?
Yeah, that's a great question because everyone's trying to figure that out right now. I can say without kind of naming too many names and stuff is some banks are exploring literally accepting things like Frax USD specifically and then not redeeming it for cash and then depositing, right? Because that's different. That's different if you just take the stablecoin on the software layer, redeem it for cash, and then put it on the bank's balance sheet. But I mean literally holding the FRX USD and then showing to the customer you have like $1,000 if you have 1,000 of those, right? And so those explorations are happening. Again, I think it'll be in 2027 when it'll roll out to a bunch of places where there will be a short list of stablecoins like that. I also think that what those short list of stablecoins will be determined by how much on-chain penetration they will have. Because at the end of the day, if you just launch a stablecoin and there's 0 holders of it, right? Like let's say a new stablecoin by Citibank or something like that, but no one holds it, no one uses it on chain, no one does anything. You could say, hey, any Citi account, you could just deposit this, but no one has it anyway, right? And so the short list of stablecoins will be the ones that are used in the most important places on chain, are held and spent on the most important neobanks and crypto products, have centralized exchange like listings so people can come in and out because those are the ones that'll be in demand. And so that's why we have such a huge DeFi footprint and continue to grow it, because you can't just say, hey, we're one of the few stablecoins that are pure money, right? And just like say it and make it happen. It has to actually be used by a large number of people.
Yeah. Yeah. I mean, I think that there's a big fight right now to get stablecoins into the hands of as many people as possible. We're here at DAS and it's everywhere. I mean, it is like, we are going to get stablecoins into brokerages. We're going to tokenize equities. They're going to be on chain with stablecoins. There's just this massive institutional push right now that I think is going to accelerate what you're talking about. So we kind of have like these two things happening at once, right? Where it's like, yes, we're going to get this through. There's going to be some trade-off, some kind of accepting of a situation that maybe like on the crypto side we didn't fully want, but at least we're getting this through. And then we have this like just institutional FOMO happening at the same time. I think we need to reset our priors a bit on what the expected growth is going to be for stable coins in terms of total supply over the coming year to two. I know we had, I think it was Scott Besson say 3 trillion by 2028. Like it looks like that's a far, kind of road. Like we're only at I think a couple 100 billion, 320 or something, 310. We're kind of breaking out to new highs again as the last couple weeks. But I think that it'll be kind of slow. And I think next year will be the year where we really see that acceleration, because this is happening from both sides right now. And it's just undeniable. And I think something that people are like interested in, Sam, is like, how do I invest into this? Right? Like, how do I get in front of this? I know this is going to happen. And there's a bit of like a sentiment gap happening where people are like confused how to invest in this. Obviously, you're the founder of Frax. There's public equities. There's kind of other crypto tokens. But I'm curious, like, what you think the general like investment landscape is going to evolve into. So, we have this institutional track. We have this clarity track happening. How do we, get in front of this? How do we invest into this? What are some of the second and third order effects that are going to happen that will, maybe change a dynamic in the market, present good opportunities?
Yeah, I mean, I think that the main stablecoin, assets that are investable, obviously not financial advice, but like Circle stock, Frax tokens, clearly there's Sky, which is a little bit different because their main product is yield bearing, like DeFi stablecoin. But we saw Circle went down by 20% because the market actually can properly price in the fact that, their way of actually distributing USDC got hit the hardest, right, in this current wording, which is, again, not final. But I'd like to see people and investors and stuff, as they get more and more sophisticated. For example, this wording obviously is very good for DeFi native distribution genius compliant stablecoins, which Frax, right? And there might be a few more, right? But I think the market is getting better and better at being more precise about the different flavors of stablecoin investment. Like Sky, great yield-bearing stablecoin, protocol. Different thesis, Athena, obviously. But for when it comes to Genius, like money payment type stablecoins that have like the hundreds of billions and trillions of TAM, I think there will be a few flavors, right? There will be Circle stock, there will be Frax tokens. There's probably like, I don't know, other maybe there's like Paxos stock in the private markets, but they all will have their different value propositions, so to speak. And I think the market's getting better at pricing them. And obviously Tether seems like they're coming out more and more these days.
Yeah. So just a couple last things. So the market is right or wrong about Circle stock over the last couple of days?
Say that again?
You think so? So it sounds like the Circle way of distributing USDC got hit the hardest. It got hit really hard. Do you think the market is right or wrong about the Circle stock over the last couple of days?
I think it's right that it hurts Circle the most, but I don't know if 20% wipeout is like, maybe it's partly due to the war in Iran or whatever, but like in macro, but like I think it's good that people are investors are specifically able to make these kind of changes. It's like, oh, this hurts Circle the most, and not, like Frax, the token didn't go down 20% during that, right? But like the point is, like, they know how to value these things more and more. I don't know if the absolute amount was the right amount, but yeah.
Okay. The other one was just kind of based on the stat that Andy brought up. You know, Scott Bessent set the line at $3 trillion by 2028. You taking the over or the under?
Well, I don't know if Secretary Bessent expected what is $100 crude or like a giant war on a weekend that it was not a 48-hour like excursion, whatever President Trump calls it. But I would still take the estimate as real, but I would take it as a step function. I don't think if people thought, oh, it's gonna slowly and evenly like get there, why aren't we like hitting the dot plot, you know, on like a linear graph? I don't think it's going to be like that. I don't think it's going to be like that for H2 of this year either. But I do think the estimate is fairly accurate. You know, assuming literally World War III doesn't start, which seems like it's more likely these days. But I think I'd put it still there by 2030.
Got it.
Yeah.
Sam.
Yeah.
Thank you so much for coming on, man. Always a pleasure.
We appreciate
you
in New York,
your
man.
words. You know, frankly, I think you might be the lone wolf when it comes to this Clarity Act as a success for the crypto industry. But I have a feeling more and more people will start to come around to that realization, and I hope we get it. Polymarket has a 61% chance Clarity Act signed into law 2026.
Yeah, next time I'm back, hopefully it's either there or almost. Thanks for having me, guys.
Yeah, cheers, Sam.
See you next time. Thanks, Sam.
Alrighty, guys, we're gonna rotate into Zach Pandl here, the head of research at Grayscale, guys. That was Stabled Up, episode number 25. Clarity's coming. We're going to get this bill in. It's happening. There's obviously going to be some winners and losers and a changing of market dynamics. We're going to talk about more of that and more of these market dynamics with Zach. Give us just a second. We're going to get them all set up, and we'll be right back, guys. Alrighty, guys, we are back at the Nest live. We've got Zach, the head of research at Grayscale, with us here today. Zach, welcome to the studio, man. Welcome to the Tokenization Tower.
It is my great pleasure to be in the Nest. I've been looking forward to it.
Absolutely, man. Tell us a little bit about the event this morning, hence the necktie, and it is certainly the digital asset necktie era.
It is unfortunately the necktie era, although it looks sharp.
Yeah.
I have a Wall Street background and thought I was escaping the life of neckties, but they followed me into crypto. Yeah, this morning Grayscale hosted one of our Crypto Connect conferences. This is an event for financial advisors and institutional investors to level them up on investing in crypto. Basically, we hosted that this morning. Excellent event. I think a lot of energy. It certainly doesn't feel like a bear market if you're in the business of pitching crypto to institutions.
I totally agree.
Yeah, I mean, we've seen this, we've heard this all around Digital Asset Summit, all around New York City. It feels like there's this institutional FOMO, this institutional bull market, and that is a very, very divergent sentiment than what we're seeing on Twitter in the typical like crypto realm. I've said crypto's dead, but the exports of crypto are very much alive. Stable coins, digital assets, tokenization are the talk of the entire financial world, but we're leaving behind a lot of the old crypto guard. Is that what you're seeing as you're talking to those with the capital ready to deploy?
That is a very interesting framing. Look, I love the framing of the exports. I think that's right. Some things grew up in crypto now are going to change the financial system. But I guess I would quibble that the old guard ideas of crypto are dead. And maybe I'll defend two things in particular. One is I love the fact that crypto is a grassroots, bottom-up, global retail phenomenon, and I think to some degree it will always be that. And that's really about permissionlessness. Anybody can try anything, and I think that we will always have an ecosystem of new ideas, young people throwing out protocols and seeing if something works. Trading around these ideas. I think that will always be a part of crypto. The capital comes in and the capital comes out. The other thing, of course, and maybe something that we can touch on this call is I think the original cypherpunk ethos is very much alive. You maybe need to go find it. But I think the idea that crypto offers something, not only exports that can be used in the mainstream financial system, but something truly distinct from the mainstream financial system, censorship resistant transactions and things like this. So I guess to me, those elements, those pillars of the early crypto thesis are still there if you look for them. And I certainly hope they don't go away.
Yeah. Yeah, incredible. I mean, permissionlessness, decentralization, this is ultimately what we're realizing institutions want too. When we were in DC, there's people coming there from all walks of life, all over the industry, different companies coming together. And the consensus was, look, banks aren't going to want to deploy and work on other banks' technology. Everyone has this competitive nature to them, for better or for worse. We live in a capitalistic society, which I think is ultimately a good thing. And what we have is the potential to redesign the financial system on credibly neutral infrastructure. And this is, again, true to crypto's original ethos, as you're talking about. How important is that when you're speaking to asset managers, when you're speaking to banks, especially when we have, New York Stock Exchange launching their own networks, we have new entrants into the stablecoin market. How important is it that they deploy on a credibly neutral layer?
Yeah, that's a great question. Look, I think at some level, what you're seeing from institutions is just if you can't beat them, join them sort of mindset. I think that they have realized that stablecoins, that tokenized assets, other applications of this technology, the train has left the station and they better get on board or else it'll cost them down the road. And so even institutions that are competing for the same revenues, credit card companies and commercial banks. These are competing head-to-head with the stablecoin businesses. That's why they are colliding in the Senate at the moment. We can talk about that too. Look, in terms of the choice of blockchains, my own thesis around this, permissionless, credibly neutral, I think this is something that will progress in phases. And my own take is that we actually will have a more centralized, permissioned preference by many institutions to start out with, and you will see some ground gained by some of those things. And the bigger prize is those credibly neutral, permissionless, global, censorship-resistant, kind of pure peer-to-peer, decentralized finance visions. That's where the bigger prize is, but I don't know that the financial system is totally ready for it today. And I actually don't know whether the tech is totally ready. Privacy, identity. We need to solve a couple of things for the pure Ethereum vision, if you will, to be executed. And so I think we're going to see some centralized versions of tokenized finance that maybe people don't love in the crypto ecosystem, but you just keep building towards that vision. We will get there. We will get to that pure vision eventually.
Yeah. I mean, definitely. I mean, you mentioned privacy, right? That's something that I know that Grayscale is passionate about. Barry is a big Zcash bull as well. What is the state of privacy adoption from your perspective now? How big of an issue is this kind of for this institutional adoption phase?
Let me make a little bit of a silly metaphor, just with my friends here in the nest. We went through a necktie bear market, I think, after COVID, and maybe we're coming out of it today. We went in a financial privacy bear market for a long time. We've been looking at this very closely in the context of some of these investment ideas in crypto. You have to look back to the rise of the internet, online banking in the 1990s, and things like the Patriot Act in the wake of 9/11, here in New York, it referenced that. There hasn't actually been a lot of focus on financial privacy for a long time in capital markets. Our deep thesis is that is at an inflection point, driven by a few things, but number one is AI. That's really the major technological change happening in our world today, aside from public blockchains. And AI does raise some questions about financial privacy and the surveillance tools that are going to be available in the coming years. So our thesis is that we are at an inflection point where you're actually going to see a much bigger public discussion, way beyond blockchains, on the issues of financial privacy. And so the Zcash thesis, the Zama thesis, some of the other privacy tools that we have in crypto, I think we are just getting started in that broad public conversation. I think there's potentially quite significant financial upside to some of these assets.
Yeah. Andy put out a tweet, I think must have been a couple weeks ago, that got a lot of traction that we like to talk about. And I'm actually going to make this a two-parter. And the tweet was about how if the tokenization super cycle is correct, and we do have every asset tokenized on chain, who is the biggest benefactor of that? The second piece that I want to add to that is, if this AI, crypto, privacy wave plays out, and we do have a lot of inference and decentralization baked into that, who are the biggest benefactors of that wave? I'm just curious if you have maybe a couple of leaders in your mind as these particular cycles play out.
Yeah, let me answer it in this way. Look, I think you can, on the tokenization thesis, and it relates to some of these tools, I would encourage people to think in terms of phases. This is going to take a long time. The tokenization journey is top of the first inning. Maybe the first pitch has been thrown at this point. We have a long way to go. I think it will be a story of all of our careers, frankly. So very, very, very early. I think we are in the beginning of phase one. And my view is that you will be surprised, people will be surprised that some of the centralized and more, let's call it institution-centric models see a fair amount of success over the short term. And a good example of that would be Canton Network. And I mean this in a very positive way. I think that they will see shorter-term success, partly because they are able to solve privacy and identity in the same way that our institution-centric financial system solves those things today. It basically keeps the same model. And so it solves some of the challenges. So I think you will see some of those things continue to gain ground. They're having good traction today. I think that they will continue to have good traction. The question, though, is how much upside is there to that vision, to investing in the token itself? We're an investment platform, so ultimately that's what we care about. In a second phase, maybe you will see hybrid models of some kind. There's lots of different chains that you could point to, but something like Avalanche, which has both a institution and a permissionless feature, or the Ethereum L2 ecosystem is a bit of a hybrid structure like that. I think we will be in that scenario for a while. And then I see the kind of phase three, the ultimate vision, as a pure, decentralized, peer-to-peer, smart contract-based financial system where we have actually disintermediated many of those institutions. And I think some institutions see that sort of roadmap also. And that's also why you should expect some of the institution-centric models like Canton see some success because they don't want to be disintermediated. They want to continue to control their own domain. And so I think investors should think about it playing out in that way. There's some maybe lower hanging fruit, let's say, institution-centric blockchain technology solutions that are not pure decentralized finance, clearly. And then ultimately, over time, we will get to the bigger vision, and maybe those things have bigger investment upsides, but they may take longer to achieve, and there's still some missing tech that we need to build along the way.
And Zach, I just, in your own personal view, is there any kind of time horizon that you see these things playing out? Are we talking months to years? Are we talking decades at a time?
Let me put it this way. I think Ethereum has, at least a couple of years before it is totally ready to onboard global finance at scale, if that's the tool. And I think the roadmap, the Ethereum roadmap, straw map, as it's called today, in my personal opinion, articulates the right vision, that you need to stick with some core principles that relate ultimately to trust. I actually think that's the hardest solve and the thing that Bitcoin and Ethereum do most successfully today. They are platforms that anybody in the world, today does trust, and I think you need to maintain that first and foremost. But you do need to solve, speed, and cost, and maybe isolated fee markets, things like that, and on-chain identity tools. If we're going to tokenize, say, some of the work that we do, some of our products are for accredited investors only. You have to certain regulatory requirements on who can buy these products. You need to have on-chain identity tools so we know who we can offer these products to, and you need, of course, to solve privacy. So I think it's going to be a couple of years, and I think that that's okay. I think that the tokenization of capital markets is a 30-year vision, and so the big project should be focused on that 30-year vision and not the next 3 months.
Yeah. What about the decentralized AI part of the vision here? Is that a multi-decade vision as well? I know you guys are big bit tensor bulls. What does that actually look like for that thesis to play out?
We are. It will also be a long story, but my view on this is that the time is now to be investing in these assets. I think you are still at remarkably modest market caps for what can be achieved with these platforms, and so I would say from a investor's standpoint, you really want to be looking now at these assets. And the other thing I would say is, the problem that we are trying to solve is also here today, or at least it's on the doorstep. Let me tell the story in this way. We have Bitcoin, okay, because money as a technology is something that's too important just to be left to centralized authorities. Too risky to leave all of the money to say the government bureaucrats or something, or some centralized agency. Our thesis at Grayscale is that artificial intelligence will be so important in the 21st century that it's much too risky to have just a centralized entities running all of it. And that is what is happening. All the capital, all the talent, all the intellectual property are coalescing around a small number of groups, basically in the US and China. And we believe that is creating risk already. So I would say, the problem is on our doorstep. The time to start investing in these ideas is now, and it'll take a little time before they are fully fleshed out. But I think the investment thesis and the rationale for these tools is absolutely here today.
The current administration has called AI this national defense issue, also putting digital assets and crypto into that as a race with the global powers that be. Why is this such a critical piece of the future infrastructure of our economy and our country?
There's a couple ways to answer that question. I'm going to give you the somewhat cynical answer to that question. Because I come from a macroeconomics background. Lots of people come into crypto from different angles. It's a multidisciplinary field, some computer science, et cetera. I come from a macro background and came through the Bitcoin door, let's say, thinking about the imbalances that we have in our economy today and what that means for capital markets. And the big glaring imbalance, in my view, is deficits that can't go away because they are very deeply entrenched and bipartisan, related to entitlement spending and the debt growth that creates and what it means for fiat money. So, the cynical perspective of why there's so much focus on technologies is that if you can't raise taxes or cut entitlement spending, the only way to solve the debt problem is massive growth. And so I think the reason that these things are such a priority is that the administration is searching hard for growth. Now, that is a reasonable response to the challenge. You know, personally, as a voter, I guess I would like to see some fiscal belt tightening as well as prioritization of growth, but we can't do that, I guess, in de facto from a political standpoint. So the administration is going gangbusters for growth. I think that is the reason why you find where can the growth be? You got to look for major technological trends, artificial intelligence, public blockchains. Those are the right candidates. So I think they've picked the right things. But I think how we got there is partly a political outcome and the limits to another way to deal with the deficits.
Let's say this thesis is correct, and you know we're going gangbusters for growth. That's going to be a team effort, right? Like the administration isn't going to do it alone. Us as an industry, we all have to join forces. Like, how does this play out? The administration is trying to Genius Act went well, Clarity Act a little slower, but still trending in the right direction. You were speaking with asset managers. We heard lots of tokenization announcements from New York Stock Exchange, NASDAQ, and the largest institutions and exchanges and venues. I guess good place to start here. What is Grayscale doing to support this effort? How are you working with asset managers to ultimately go gangbusters for growth?
Yeah. We are leveling them up from an education standpoint, first and foremost, and then offering easy to use, effective investment products is sort of as simple as that. It does take a while to get leveled up on crypto. Certainly I wasn't obsessed with Bitcoin the first time I heard about it. It took several tries, I think, for it to totally click, until you see the matrix and then can't unsee it kind of thing. Just like everybody else, I had that experience. Our clients have that experience. You need to go through these ideas over and over again until it finally clicks and they say, okay, no brainer. I need to build this into my portfolio. And then from an investment product standpoint, there's lots of ways to own crypto. You can buy crypto on exchange. You can hold it there. You can self-custody. Of course, we know all of these things. The ETFs are the easy button for institutional investors because they solve all of the individual challenges that they have around custody, around the cost of trading, around the holding cost, around doing your taxes, around estate planning. Of course, many of the people that we talk to, they're, institutions are ultra high net worth. They have a lot of complex estate planning issues that they're thinking about. And so if you're holding, say, crypto in self-custody, you need to deal with all those topics yourself. The ETFs are the easy button. And so that's what Grayscale is there to do, educate investors on this and provide them access to this ecosystem in a way that solves all the particular challenges that they have as institutional investors.
Yeah. And are they most interested in a particular sector or asset class? Like what is their demand appetite look like currently? Because we're in a bear market,
Yeah, absolutely. Bear market, yeah. The price is down. I certainly doesn't feel like a bear market to me. I guess I'm too busy to call it. Let me say I'm not willing to call it a crypto winter. I think crypto winter is both a magnitude and duration comment, and I potentially think that evaluations could come back much faster than the market thinks. So we will see. But in terms of
a cold front.
Yes, maybe a cold front coming through, or something like the winter in Florida or something. But institutional investors, I think it's a very easy answer. They are primed to talk about stablecoins and tokenization. They're not, sometimes Bitcoin can be a challenging subject in the same way that gold is a challenging subject. In my old life as a macroeconomist on Wall Street, not everybody is ready to invest in gold either. And so you have to have some of those same discussions about a commodity money asset that doesn't pay a yield. Sometimes there's that. And investors that we speak to are typically also not ready for BitTensor or Zcash, but they are primed to talk about stablecoins and tokenization because they see it all around them. And they see maybe the CEO of their own company talking about this. Some of these CEOs were at the Digital Asset Summit this week. And we can see that effect at our clients. The troops are very activated when the top of the house message is clear on these issues. So stablecoins, tokenization, those are definitely the buzzwords today for institutional audiences. Naturally, we start there, and then we help them through some of the other topics, Bitcoin, decentralized finance, et cetera.
Yeah. What is the urgency right now from their side? Like, why is there anything that's driving the urgency of them getting this done? Like, what is driving this?
Two things. One is the use case is clear, and people want to make sure that they're ahead of the curve. You don't want to be a late adopter and see your competitors potentially achieve higher returns or improve their business case with these tools. The other motivator is price. Investors, institutional investors, professional investors are very thoughtful about things like entry point. They are not that inclined to FOMO. They are much more inclined to be value investors. And so you're looking at prices that are, depending on the token, 40 to 70% lower than where they were at some point last year. You've seen price stabilize also, and the tokens have been trading very well in the context of tough conditions in other markets, maybe giving you a hint that the paper hands have been washed out of the market. And so that is also creating a sense of urgency, is that maybe the time to allocate is right now, because you can see the fundamentals, prices come down, tokens are trading well, pull the trigger. I think that's the mindset of a lot of investors today.
In a lot of ways, Andy and I and the Rollup at large, we see ourselves as educators as well. That's kind of how we started. We started learning from people much smarter than ourselves, would come in, and then we would learn in public alongside everyone who watches. Is there anything that we should keep in mind as you're educating? Are there things that you've learned that tend to resonate with your audiences more? How can we become better educators in this space? You mentioned you start with Bitcoin, then kind of walk through decentralization, some of these different concepts. Anything that, when you see the light bulb moment, how can we help take this message further?
Yeah, absolutely. That's a great question. I would say start from the basics. You can get people accelerate their understanding very fast. But I think just maybe going back to first principles is important. We always start our discussions with peer-to-peer finance. How different is it when I give you a dollar bill from my pocket and hand it to you? That's a peer-to-peer transaction in a bearer instrument, financial instrument. And how different is that how our banking system works? So I have to call my bank and it has to call your bank, and we have a settlement process. Just making clear that how payments work in a digital sense can be improved with things like a blockchain and a stable coin. So going back to basics, I think is important. And I think there's a tendency of crypto enthusiasts to start with the thing that they're most enthusiastic about. Maybe that's MicroStrategy's Stretch product or something like that, which is an interesting product. But it's very difficult for people to start from there and understand what's going on. So start from the basics, and people will level up quick. So we try to start with that foundational idea, peer-to-peer finance, and people get it pretty quick if you start from the basics.
Yeah. We talk a bit about the colliding worlds, like the convergence of, this decentralized financial, peer-to-peer financial world and, the traditional financial world. In some sense, I kind of think that's a bit simplistic. I've kind of updated my mental model towards one that is a bit more of a progression, starting from the current narrative meta, which is tokenization, and saying, okay, once we tokenize all of these assets, they will end up in these peer-to-peer DeFi mechanisms where things are a lot more composable. We end up with lower latency. We have quicker settlement times. A lot of creative financial products can be born out of these mechanisms, especially once these assets are tokenized. Then we end up with the vault complex, and you can even imagine AI managed vaults. Does this resonate with you, this mental model? Is there anything missing that we should fill in the gaps?
Yes. It does resonate, and I think there is something I'd like to highlight here, which is I think a missing piece that is underappreciated is institutional wallets and institutional custody. I mean, this is a very simple thing, but the financial system is about connecting savings and investment, connecting the people that have an asset and people that can buy the asset. So it would do us no good to tokenize $300 trillion worth of assets and say, stick them on Ethereum, stick them on Solana, if there were no capital to buy those assets. We will get there on tokenization, but there has to be a kind of harmony on the tokenization of assets and the ability of capital to come on chain. So big investors, they buy securities and they hold them in a brokerage account, say today. That's how their systems are set up. For them to be able to receive tokenized assets, they need to have wallet infrastructure. They need to be able to interface with the blockchain. And some of the leading firms, I would name check Morgan Stanley as one of the Wall Street firms that's really leaning into this idea. They get it. They understand that that's the missing piece, and they need to build it out. And they are putting the investment dollars to work and building that out. But that's a missing piece. We need to have not only the asset side infrastructure, tokenizing the assets built out, we also have to have the investor side infrastructure built out. And wallets, in my view, are kind of a key missing piece and where the investment is going at the moment for the institutions that really get the vision and are trying to work towards it.
So one last follow-up here. 3 of the largest announcements that we saw over this Digital Asset Summit week have been these partnerships between tokenization platforms and asset management platforms. Just to rattle off a few, you had Invesco partnering up with Superstate, you had Ondo partnering up with Franklin Templeton, and you had the New York Stock Exchange partnering up with Securitize. Do you think the biggest missing piece is the institutional wallet complex to enable the buy side of all of these tokenized assets?
I do think that is the biggest missing piece, that the capital is not ready to buy tokenized assets. You know, there's a reason that the most successful category has been the T-bill, the tokenized T-bill products, is because that's what the capital that was already on chain needed. You know, if you are a crypto startup or a someone with Ethereum wealth, say, and you already had your capital on chain, what you needed was a safe place to park cash and earn a little bit of yield. And so it was appropriate to start with those products. They've seen incredible take up because they were delivering to the need, to the investor's need, and that investor was on-chain capital, okay, native on-chain capital. If we're going to tokenize the world's bond market and tokenize the world's stock market, we have to get everybody's capital on-chain as well. And I think that wallet infrastructure is actually a key missing piece. There's lots of other parameters, and those are the things that Superstate and Securitize and all these specialists are working on, all the regulatory requirements, et cetera. But, some of the basic infrastructure needs to come too.
We're going to see a Grayscale prime broker, Grayscale custody product here pretty soon.
We will see. We are working on a lot of different things. We're an asset manager first and foremost. And what we're most focused on today, so Grayscale runs both exchange-traded funds, ETFs, and private funds. And we just want to make sure that investors have access to the best tokens in the best wrapper. That's what we're, and what my team and the research team is most focused on, is trying to identify what those things are and getting them to the ETF as smoothly as possible. I think that's how we can service the market most effectively today. Pick good assets, get them in the right product structure. That's a way to for our investors to experience good outcomes from the crypto asset class.
Yeah. I mean, I just wonder if there's going to be a phase shift here where we've built a lot of these kind of like building blocks in this cold front in Florida here for the last 6 months. And there's just kind of like this tipping point where all of it comes together. We have clarity coming, right? Like in the bear, these things don't really feel that important. They don't feel like they're really happening. On like prices don't react. People talk about it for a couple of days and it's gone. It's like, it's become normal. It's kind of insane how these headlines have become normal for the industry in a world where, we would look ahead a couple of years back and be like, that's insane. I just wonder like where you think we are at in the kind of state of sentiment, broader market, and just kind of like what is going to be the drivers to turn this market around? Is it going to be institutionally led? Are we waiting for clarity? Is there more regulatory clarity? What's going to drive this market to turn around in your opinion?
Yeah. What we're seeing in crypto, where the price and the fundamentals seem to be out of sync, is the most common thing in the world in capital markets. So, whatever market you used to cover, I used to spend a lot of time on currency markets, and I maybe think that, say, Japan is having a great run, but the yen may be depreciating for all kinds of reasons, because the capital flows that drive the price and the activity that drives the fundamentals are two different things, and they have harmony in the longer run, but not always in the shorter run. And this is a very conventional thing. So the fundamentals are there. So your question is just, when does the capital come back? And I think it's a macro question. The price of Bitcoin, price of our assets have been moving in tandem with lots of other things, with software companies, with defense tech stocks, with quantum computing companies. I think that's an important thing to say. You know, it's not, I don't think this is a quantum drawdown. The quantum stocks sold off exactly the same as the price of Bitcoin. So it's just about risk taking in capital markets. And so I think you need to look at macro variables. You need to think about, you know, is the Federal Reserve likely to hike rates? When is the war going to kind of start winding down? You know, what are the prospects for the different parties in the midterm elections? These are the things that are going to drive risk taking, and on a broad level. The other thing that I would like to say is I think that there is a very thoughtful debate going on the conflict or complementarity around AI and different types of software. AI is the biggest disrupting force in the economy today, and so investors are saying, looking at everything in their portfolio and saying, is this complementary to AI or is this in conflict with AI? And I think in this last drawdown, which partly was AI disruption driven, I think that there were babies thrown out with the bathwater. You know, good assets that probably are good assets and complementary to AI, but you know, there's a lot of de-risking in portfolios. And crypto is one of those things. So I think what you're going to see and I think maybe one of the reasons it's trading pretty well lately is also investors saying, actually, this asset class is complementary to AI. It's, you know, public blockchains and large language models are accomplishing something completely different, and they go hand in hand with each other. So my answer to this, you know, what is it going to take for valuations to come back? You know, I think some of these, I would even consider clarity a smaller thing from the standpoint of valuations in markets. I think these are macro questions, and I would ask, you know, what is the economy doing? What is the Fed doing? What is risk-taking in software investing and early-stage tech investing doing originally? And how quickly can people kind of come to this realization that public blockchains and AI are complementary? That's what I am focused on, much more so than the 4-year cycle type of idea. Now, we will see, you know, the 4-year cycle enjoyers were right on the top, okay? I think we need to acknowledge that. And so, you know, you're supposed to put some weight on that concept. But I could see this kind of nature of risk-taking in frontier tech come back much faster than like a 4-year cycle analysis would suggest. And I think investors should put some weight on both of those concepts. I think we could rebound relatively quickly.
What catalysts are you keeping an eye out for? Is it the end of the war in Iran? Is it
short term? That's the biggest thing. You know, look at any chart in financial markets, the S&P 500 or anything else, and plotted it against the price of oil. You know, markets were trading very well because, you know, especially things that are closely tied to the underlying health of the economy, industrial stocks, equally weighted S&P index, EM stocks, industrial commodities. All that stuff was trading great because the economy is doing well, performing well, and it was interrupted by a massive spike in oil prices. So we need to kind of move away from this situation. You know, I don't know that I want to be yet another person to become a geopolitical expert in this period. So we will see how it unfolds, yeah. But I think that that's the single most important short-term factor. And then the next question is going to be Kevin Warsh's confirmation hearing. That's coming up quick. I think maybe that this is also underappreciated. You know, that there's a lot of confused takes on the debasement trade and the Federal Reserve. I think it is the case that something that was a headwind for our asset class, among other asset classes, is that despite what the price of gold and the price of silver were doing in January, they were becoming a kind of meme trade, essentially. From a fundamental standpoint, the debasement thesis took a step back in January, meaning like a couple of things happened that shored up the Federal Reserve's independence and shored up the likelihood that we have decent inflation outcomes in the U.S. And there were two things: Kevin Warsh being named as the Federal Reserve chair to follow Jay Powell, and a Supreme Court case that seemed to suggest, oral arguments in a Supreme Court case that seemed to suggest that President Trump could not remove Federal Reserve Governor Lisa Cook. Right. These two things shored up Federal Reserve independence and probably took some air out of the debasement thesis. Now, Bitcoin realized that right away. Gold and silver are realizing it with a lag. So I think that we're going to go back to those types of questions. You know, what kind of central banker is Kevin Warsh going to be? That's going to be an important question after we get, hopefully, over the military conflict here.
So on one hand, we have, like you're saying, the deflation of the debasement thesis kind of, consolidating a bit. But on the other hand, we're going gangbusters for growth. And these two things are fundamentally at odds. How do you reconcile these two forces?
Yeah, I think growth is primarily the thing that investors should focus on. I mean, just sit back and ask yourself, if you are in a booming economy, if industrial stocks, if EM stocks, if this stuff is taking off, and at the same time that stable coins and tokenized assets are deepening into the financial system, is the price of Bitcoin and the price of Ethereum just going to continue to slide into the end of the year? I personally don't see it. So my own investment, my own positioning in markets today, my own personal risk taking in markets today, and the advice that we give to investors is that we have a solid economy, and that assuming that we can get over the military conflict, we'll be back to that pretty soon. And I think risky assets will trade well, and I think crypto probably will participate in that, and it won't continue to dribble lower just because of a 4-year cycle concept. I think there will be a bid for the assets.
Yeah, I think that's probably the right take on the 4-year cycle. Like it's clearly happened now with the top, but it's going to be a shorter, like we're in more of like these like speculative cycles that are shorter and more kind of defined by a maturing asset being Bitcoin. Like even if you look at this like 4-year cycle run, the way that the chart moved looked so much different than previous. You can expect the kind of bear to be different as well, shorter, is probably highly likely.
Yeah, the 4-year cycle. Look, these are important ideas, and I absolutely respect the concept and many of the people that think about the price of Bitcoin in this way. But let's recognize that Bitcoin has been correlated to lots of other types of software, for example, or other types of frontier tech. So are we saying that those are also following the 4-year cycle, or is there other things that are intersecting with the timeline that are macro related or retail speculative risk-taking related that may just happen to be coincidentally coinciding with the 4-year Bitcoin cycle?
Zach, coming full circle to your event at the Four Seasons earlier today, you were speaking with asset managers. We had a guest, Jeff Park of ProCap. He was on the show yesterday, and he was talking about the radical portfolio construction theory. How the current 60-40 stocks bonds split is a bit antiquated. He pontificates basically 60-40. 60% should be betting on the health of the economy, long the current financial system. 40% should be what he calls resistance assets, kind of hedging or betting not necessarily against, but on potentially alternative asset classes and alternative to the financial system. I'm curious what percentage of portfolios you're recommending to asset managers they put into digital assets, and if you resonate with this radical portfolio construction theory, if you see it as an alternative asset class, or generally, what does your portfolio construction look like, given everything's in flux all the time, interest rates, wars, these sorts of things, but at an equilibrium, what is your portfolio construction?
A great question, and a huge respect for Jeff's ideas on this. We were honored to have his partner at ProCap, Anthony Pompliano, at our event today. So, we know this team well, love the work that they're doing, including the recent acquisition of a AI-related financial services business. So, very cool stuff and lots of cool ideas on the portfolio construction concepts. Let me say a couple things. First, there's an academic answer to this question, and we start with that with our clients, because that's how they approach these things. They think about portfolio construction, optimization in a particular way. They use particular types of models. So we use those models to show them what happens when you include Bitcoin and crypto in those types of portfolios. And the answer is 5%. That's sort of the academic answer. And then we, talk with our clients on how do they take risk? How do they think about how the world's going to progress, et cetera. That's the academic answer. I find myself agreeing a lot with Jeff, and how I would articulate the story is, there's a lot of macroeconomic uncertainty. That's really my background, applying concepts from textbook macroeconomics to financial markets. And there's a lot of uncertainty. There's uncertainty about inflation, around growth and how it will be distributed in the economy. within the U.S. economy and across the U.S. and the rest of the world? What would be the role for the dollar, et cetera? How effective will certain other types of alternatives be? It's been a great run for things like private equity, private credit. Are those still the right alternatives, or do you want to spread it around? So the academic answer, 5%. My own view is you should be thinking hard about really distinct bets in a portfolio, and I think Jeff's work speaks to that. I'll say one other thing, though. People approach risk-taking in lots of different ways. My own personal investments tend to be driven by the things that I have maximum conviction on, that I think have the best return opportunities for the right amount of risk. And so, I own way more than 5% crypto allocation because, yes, I understand that's maybe that's the right zone for most people to be in, that are running a diversified portfolio. But I really believe in what we're doing here and the fundamentals, the value of these assets. My team has spent more time than almost anybody else thinking about these questions. And we have deep conviction in where things are going. And so I'm willing to make a much bigger bet, I think, on the asset class than the average investor.
So are we. We're right there with you, Zach.
That's right.
Yeah. Man, this has been incredible. I don't have much else. Zach, I'm just curious, just a last word on Grayscale and what we can expect over the coming months.
Yeah, so Grayscale is an OG in the space. We've been at this since 2013, which is very early days in Bitcoin investing. Grayscale has been a pioneer in the space up to this point, and I expect us continue to be a pioneer. I think some fund managers, may look at Bitcoin, may look at Ethereum. We are much deeper down the stack, in very interested in ideas related to privacy, assets like Zcash, very interested in decentralized AI, open source AI, assets like BitTensor. We're going to continue to look at everything in the space and try to surface the best ideas for our investors. I think that's what people can expect from Grayscale.
Well, we appreciate your hard work and educating the community at large.
Yeah, and onboarding large institutions, retail folks, etc.
We love what you guys do. Fan of the show. First time caller, long time listener,
Yes,
as
sir.
they say. Delighted to make my first appearance at the Nest.
Thank you so much. Yeah.
Ladies and gentlemen, we will be up next with David Schamis. We're going to take a super quick break. We're going to hang with Zach for a bit, and we'll be right back. Ladies and gentlemen, we are live from the Tokenization Tower. David, Schamis, welcome to the nest.
Nice to be here.
It's good. Not a bad view, huh?
It's pretty awesome. Yeah, it's a great view.
You're a local New Yorker, New Jersey?
I am a New Yorker. I live on Long Island, a town called Sands Point, but I lived in the city for 11 years.
Cool.
And I grew up on Long Island, so I've been a New Yorker my whole life.
Great, man. Great. Well, I'm sure you've been to the Empire State before.
I have.
Obviously not here, but it's good to have you.
Good to be here. My first job was at Salomon Brothers at Seven World Trade Center, one of the buildings that went down.
Of course.
And my view was exactly faced exactly this
Midtown.
way. So it's kind of cool to face the opposite direction.
Yeah, man, great, good. I mean, what a couple of weeks for the world, for markets. CEO of Hyperliquid Strategies, David, give us just a quick update on your progression here into Hyperliquid Strategies. I think a lot of our audience and folks will know you, but how did you get started, and what is the state of Hyperliquid Strategies?
Yeah, so I think everyone knows, or at least some people know, Hyperliquid Strategies, we're the largest DAT for Hyperliquid. We own something like a little more than 18.5 million tokens right now. That number will be growing over time. And we got involved in this about a year ago, a little less. So my career has been almost entirely financial services private equity. Completely TradFi, with one exception, which I'll get to in a second. But and I'm the co-founder of a firm called Atlas Merchant Capital. Bob Diamond, the former CEO of Barclays, is the other co-founder. He's the CEO. I'm the CIO. About call it 10 months ago, we got turned on to Hyperliquid by some friends of ours, partners of the firm, and the real argument they came to us with is that the world probably doesn't need another Michael Saylor knockoff, right? Bitcoin probably doesn't need another DAT. But look at Hyperliquid. It actually kind of needs a DAT. The world needs it. There's a scarcity value. We can go through this in more detail if you want, but Hyperliquid at the time, and even still now, is not easily traded in the United States. It's only really traded on chain. And for people that look at it and its sort of equity-like features that it has, and again, we can get into that, there's a real need for a DAT. There's a real need to be able to simply buy the token or the equivalent of the token in a regular way equity account on your Fidelity or Charles Schwab or whatever, or Robinhood. So we spent kind of May and June sort of investigating that and really figuring out if that was true and how we felt about that. All the while, we learned more about Hyperliquid. We got ourselves more excited. Along the way, we had heard through some reasonable sources that Paradigm was looking to do the same thing. We got introduced to them. It was kind of a match made in heaven pretty quickly. The things we lacked, they were really long in, and the things they lacked, we were really long in as far as partners together here. So we went from sort of shaking, meeting for the first time to shaking hands in, I don't know, 2 weeks, 3 weeks, not a long period of time. And we set out in mid-June to raise $300 million for this idea. And by early July, we announced a deal of $888 million. So obviously a very successful fundraise when you're almost triple what you expect. And I think that proved to us, at least, that others besides just us believed that the world needed a Hyperliquid DAT. We closed in December. You'll notice a long gap between signing and closing, and it was a different kind of structure. Lots of people contributed Hype tokens to us, not just cash. We did that in a tax-free exchange. I'm not going to bore everyone with the details unless you want to hear it. But the big difference between us and most other DATs is because we had that long period of time between signing and closing, once we closed, we didn't have that crazy unlock where the stock gets clobbered because all these people get to sell their shares. Yep. The day we closed, everyone's shares were already fully tradable, and that drama didn't happen. So we never had to go through that.
And conveniently avoided what is now in hindsight the top of the previous market cycle as well.
Yeah, sometimes it's better to be lucky than good. Look, we something like 2/3, a little less, 62% or so of our capital that we raised was in Hype token. Yeah. And that Hype token was priced last summer. So that was a higher price, frankly, than it is right now. But whatever, 38% was in cash. And that cash, we really didn't start putting to work in Hype tokens in a serious way until kind of early January.
Yeah.
And so that brought our average token price down a lot.
Yeah.
Our average token price is about where the price is right now.
Yeah.
Which
it's like 39-ish or so.
Yeah, it's that neighborhood. So we feel pretty good about that versus pretty much every other DAT.
Yeah, for sure.
The other thing versus every other DAT, or at least I shouldn't say every other DAT, most every other DAT, is the day we closed, there were a lot of people on crypto Twitter expecting us to spend whatever $350 million to buy hype in 48 hours.
Of course.
And had I done that, I would have been a hero on crypto Twitter for 48 hours. And then we would have had a problem, right?
Yeah, we had no money left.
We'd have no money left. We probably would have bought at a higher price than we ended up buying.
Yeah.
So we've been much more judicious, much more thoughtful.
Yeah.
We have this on the website, so these aren't any secrets I'm saying, but we probably have, give or take, a little bit over 100 million in cash still left.
Yeah.
It's nice to have that flexibility. We're seeing DATs these days doing a lot of unnatural things because they're so short on cash.
Yeah.
When I say unnatural things, I mean a lot of things, but one example is like selling calls.
Yeah.
If you're a DAT, your job is to be giving upside to your investors. Selling a call, you're literally giving away some of that upside so you could keep the lights on.
Yeah.
Like that's exactly what we didn't want to be doing.
Right. Yeah. I feel like the Hyperliquid thesis has evolved a lot as well as since you started.
Yeah.
On the numbers here for the DATs, yes, there are tons of DATs that are underwater. They're tokenizing jet engine shares, being forced sellers, doing crazy option strategies. There's just a lot there. And I'm not a proponent of what's happening. I don't know what's going to happen. And I don't even want to get into it too much, but I do think that there's something to be said about being the one DAT that is above water, or at least at the margin, right?
Yeah.
And so glad that that's the case and hope that obviously continues to be the case. On the thesis side, though, Bob, I feel like when you started, it was, okay, let's just have this revenue generating equity-like token. It makes a bunch of money on chain. There's a lot of these perps contracts, these degen kind of traders. They trade with size, with high leverage, and this token and this exchange is just a really money-making, it's a machine. It's a true machine. Over the last couple of weeks, especially post HIP3, which we can definitely get into, Hyperliquid has gone from the crypto exchange for degens to the place to do on-chain price discovery for any asset in the entire world.
Yep.
Covered in Wall Street Journal, covered in tons of mainstream media. How has this affected the way that you guys are talking to mainstream media, to your investors, to clients, to people that are asking about this? Like, what is your current, Hyperliquid thesis now, and how did that evolve since it started?
Yeah, I would say a couple things. Last summer, when we looked at this sort of from a valuation point of view, because I can't help myself, that's how I look at everything. When I looked at it from a valuation point of view, I sat there and said, okay, this is a really good crypto exchange. It's growing nicely, really nicely. And if you look at sort of traditional valuation metrics, it's probably relatively underpriced just as a crypto exchange. And then, last summer, there was no HIP3 markets yet. And we thought, generally speaking, the market wasn't giving them any value for HIP3. That's kind of how we felt about it last summer. I think once we did the deal, we've been yelling and screaming about HIP3 to anyone that asks. Explaining to my parents what the hell HIP3 is not easy. But I still think the market had a little bit of a I'll believe it when I see it attitude, because there's a lot of people in crypto running around talking about how they're going to attack the massive TAM of bringing real world assets on chain, right? Like, on one hand, we're all spend a lot of time on crypto. It's a great thing. We all love it. The total market cap of every crypto combined, I think, is still less than like NVIDIA's market cap.
Yeah.
Right. So like, who are we kidding? There's still, the TAM of other investable assets is just so much bigger. So there's a lot of people running around saying they're going to do this on chain, they're going to do that on chain, they're going to figure it all out. And, with a few exceptions, it hasn't much happened yet. And I think the market saw HIP3 or Hyperliquid doing this as just another, okay, that sounds great, but I'll believe it when I see it. If you look at Hype's price, from the time we did the deal, which was, we announced it in early July, until let's just say mid-January, it kind of moved pretty close to Bitcoin and Ethereum. Probably a little more beta because it's smaller, but it, the ups and downs looked very similar. Since mid-January, which was when the HIP-3 thing is really starting to be real. Silver was January and oil was February, kind of. Yeah. Bitcoin and Ethereum went one way and Hyperliquid went another way, and it's really obvious when you look at that graph.
Yeah.
And I think I don't blame the market for saying that HIP-3 stuff sounds great. I'll believe it when I see it. But when they saw it, they're starting to believe it. It's still small, right? I mean, it's...
Yeah. I think it's like 1.4 billion in OI or so.
Something like that. I mean, the numbers look great, considering it was 0 in November.
Right.
But again, compared to the TAM, the size of all these other markets, it's still just scratching the surface.
Yeah.
I think that I wish we weren't at war. Nothing ever good at being at war. That being said, the fact that the war kind of broke out on a Friday late afternoon when the markets were already closed and the only place to trade oil for the next 48 hours was on Hyperliquid was pretty amazing.
Yeah.
And the world definitely took notice of that.
Yeah.
And that's, it wasn't just that first weekend. There were a few weekends. Again, like when you're in war, right? Like these wars don't take weekend breaks. And a war that is so, that oil is such an important part of it, like people want liquidity 24/7. And that's sort of the point here, people have gotten, in the TradFi world, we've all gotten used to, 9:30 to 4 p.m., trading with T+1 settlement. And then it's like, hold on, guys, look over here. Yeah. You got 24/7 trading with instantaneous settlement, all on chain, all auditable, all in the public. Like, what are we talking about here?
Yeah, part of my thesis as well that it seems like that you share here is that this kind of ever-growing instability and volatility, it's kind of just like the law of entropy, right? Just going to keep accelerating more and more randomness in the world. In the Trump administration, it feels like he just turned that light on. It was just like, let's just accelerate all randomness to the extent that the headlines these days are just something that you would be used to seeing on a monthly or quarterly basis is a weekly or a daily basis. I mean, anything from war to stock market prices to big acquisitions to other shooting, it's insane.
Yeah.
And so the thesis of the kind of like the hyper financialized world takes you into a place where there's going to be a stronger demand to speculate 24/7.
Yeah.
Just because there's stuff that's going to happen that's going to move markets more.
Yeah. It's not 24/7 is important. It's really important. Instantaneous settlement is really important. It's not only that, right? Like the two of us are sitting here in the Empire State Building. Like it's really casual, really easy to say, well, we can trade on chain or we can trade in our Charles Schwab accounts. Like what's the difference? There are a lot of people in a lot of places in the world who might want to go long Tesla or Nvidia or whatever. And it's not so easy to do. If you live in Botswana, which is somewhere I visited last summer, so I choose them. It's not so easy to just go open a Schwab account and buy some Tesla shares. Again, we take that for granted sitting here in New York.
Yeah, of course. I mean, the access part I think is big, but I think my point was just more about like in the Western world, it's just this accelerating desire to speculate on different types of assets. And I mean, Trade XYZ had that deal with the S&P 500. Yep. They were a co-host of our little happy hour last night as SP Global. They have a huge product suite, and so they actually gave an exclusive license to Trade XYZ to trade the S&P 500 perp.
Yeah.
Do you think that's another meaningful step, or is commodities going to be more heavily traded on Hyperliquid?
Look, I think that's a huge step. We know the Trade XYZ guys well. They're very impressive, really impressive. I would say, when you're S&P, the company, right? Like the most valuable asset those guys have is their name, right? And that name, that index is worth so much, obviously, and that is a reputation that they've generated and nurtured over many, many, many years. And when they put their name on something, they do not do it casually, right? They take that really seriously. That means the fact that they allowed this means they did serious diligence on Hyperliquid. They did serious diligence on Trade XYZ. They are highly confident of two things, right? One, Trade XYZ and Hyperliquid by extension are legitimate businesses that are not fly by night, that are not here today, gone tomorrow. These are people they're willing to partner with. And two, they're making the point that this is the future, right? Like I don't think trade. I don't think S&P is doing this for whatever, a fraction of a percentage of volume that this might get the first day it came out. This is because they're seeing the future, and the future is on chain, and the future is Hyperliquid.
Yeah, and so kind of more on the nose here about expectations. We had Santiago, a former Parify investor, now founder of a company called Inversion. He came on the show. He basically said that he's kind of bearish on tokenized equity trading relative to tokenized commodity trading. For whatever reason, he anticipates the volume on HIP3 to be stronger in the commodities area than in this product. Do you agree or do you disagree?
I'm not sure. On one hand, we're seeing it live now with things like oil. And I don't know if he made this argument, but I'll make another point. Commodity traders, are certainly very used to trading in derivative form and trading in futures form of one another. So that's not new to them. On the other hand, there are a lot of people that trade equities. It is a very huge addressable market. There's much more retail trading when it comes to regular way equities. The point I made before about access, about non-US or non-Western country, that factors into as well. If I had to bet for the long term, I would take the other side of that bet with him. Yeah. Maybe we'll bet a beer or something if he's interested. But certainly, like, I haven't looked at the numbers yet, but like for the month of March, he certainly might be right. I just think for 2030 or 2035, equities are pretty big. Yeah. The other thing I talk about a lot is you look at something like Robinhood. Yeah. A big chunk of their revenue, a decent part of their business, more than decent part of their business, are people trading options and quite short-term options. I personally think the perp form, in a lot of ways, is a much better product, a much better contract for retail people to be trading than effectively zero-day
education
options.
Gap, or
I just think first of all, when someone tells you, let's just say you and I are looking at an option, and let's say that option has a month to go. Just making up numbers here, before the exercise date, and the premium goes from whatever $2 to $3 right now. Yeah. And I say to you, explain to me why. And the answer is, well, in other words, the stock price didn't change, strike price didn't change, time didn't change, but the premium went up a lot. And the answer is, well, vol went up a lot. And it doesn't take long for that conversation to become very complicated and something that requires, some serious people with serious brain power to really unpack. And you look at any of the big investment banks, without a doubt, the highest IQ group of people at those places are the equity derivatives people. Yeah. And that's who you're on the other side of when you're a retail guy trading options. Whereas a perp, you understand the math. It's kind of easy, right? You're the whatever, we'll talk about whatever company. NVIDIA's at 180, whatever it is right now, and you do it with 5 times leverage, whatever you want to do, exactly the level at which you get taken out. There's a funding rate. You can monitor that. Nothing's simple. Trading with leverage might not be advisable, but people do it. Yeah. None of it is easy, but I think it's a lot easier to understand the basics and the mechanics of a perp than of a call option. Yeah, yeah. I
totally agree. It's a massive learning curve to understand. Even perps are a learning curve, but options is a different world. And I saw a stat that there was a massive increase in the amount of zero-date options this quarter, or it was either this quarter or this past month, than in the previous for years on end, such that the amount of volume is coming on zero-date options, options that open and close in the same day, which is super high leverage, super high risk. Yeah, I don't know the number offhand, but a higher percentage than you'd think of Robinhood's revenue are zero-day options. Yeah, exactly. It's pretty wild. And they're doing $4 billion, I think, in revenue, or I think it's either top line or bottom line per year just from options. Yeah, yeah, yeah. It's all these kind of basis trading and hedging, and they kind of trade with their users, et cetera. Let's talk about the TAM here. If we're gonna, the house of all finance, right? People are calling for $100 hype, $250 hype. We start to get valuations that get really quite big. Ethereum's trading around $250 billion valuation today. What's the TAM in your mind for this investment? How do you see the growth of the protocol? Yeah. And how does that reflect and hype the asset?
Look, I would say the bullish story is really easy, right? It's the crypto part of Hyperliquid continues to grow, continues to take market share from the Binances of the world. We all saw how sort of hopped up CZ has been, particularly like last fall over Hyperliquid.
Yeah.
So people, serious people in crypto are feeling that sort of pressure on the regular way crypto side. That's there. The real world asset side, there, any asset that could be priced with an Oracle price could be brought on Hyperliquid, on chain.
Yeah.
That TAM is unbelievable. As I said before, I think the market generally has a show me attitude. I'll believe it when I see it. I don't blame people. HIP 3 is happening right now. HIP 4, I'm sure you've seen it come out. HIP 4 is prediction markets, which is about, the most interesting and exciting thing people love talking about these days. And it's options, which we were just talking about a second ago. It can even be used for insurance, which is like my old stomping ground, what I've been doing for 25 plus years. That's also another massive TAM. And if you believe all those things, and the bull case here is really easy, and there's a lot of room to grow. And if you valued this the way people value Ethereum, or the way people value Solana, like the number is, we're nowhere near the number that it should be at whatever it is, $40 a token right now.
Yeah.
There's a bear case too, right? The bear case is it's not traded in the U.S. There's still a tremendous amount of regulatory uncertainty as what's going to happen in the U.S. That probably, I don't think there's something that can happen regulatory that'll kill this thing, but it could certainly slow it down. It could certainly create opportunities for competitors that might not be nearly as good, but somehow better positioned regulatorily, maybe.
Yeah.
And then look, in crypto, as we all know, in any business, in any financial services business, competition is real, right?
Yeah.
There's no such thing as true franchise value in financial services, because people just move to the best priced, highest liquidity, whatever they can do in any business. Competitors show up all the time.
Yeah.
4 years ago, no one ever heard of Hyperliquid.
Yeah.
So like anything, there's a bull case, there's a bear case. Right now, that equates to $40 a token. We think that's, there's a lot more upside than downside. Yeah. That's what makes a market.
Yeah. There's a new kind of policy division as part of the Hyperliquid Foundation. Jake Travinsky's leading that. He's doing a lot of work there on bringing, positive regulatory action and ideally like no action letters and these types of things into Hyperliquid and obviously the Hype EVM environment. Any rumblings from that? Anything that you can share about progress or just anything that is happening? Like what is going on there? Because I know that there was a good bit of tokens allocated to that. I think token holders will want to get a bit of an understanding of what's happening.
I was with Jake less than 2 hours ago.
Cool.
So there you go. Jake is excellent. He's putting together a really good team. I think it's really simple that it's obvious there's a lot going on in Washington right now around crypto. Right. That's good and bad, right? The good, there wasn't a lot going on for 4 years during the last administration. So I don't think Hyperliquid thought it was all that important to have direct representation in DC because nothing was really happening, good or bad. They were kind of had their head in the sand a bit. There's clearly a lot happening right now. The various legislation that's the Clarity Act and other things. There's both legislation from Congress. There's also regulatory actions from the SEC and the CFTC. And I think it became more and more obvious as 2025 rolled on, that there were some things that, Hyperliquid was getting sort of free representation from other crypto policy people where they were, but there were other places where, their interests were different. Hyperliquid's interest and Coinbase's interest are quite different when it comes to a lot of stuff in DC. So I think Jeff and the team pretty much realized they needed someone on the ground. Yeah. They needed people that on the ground. I think it was a very good decision. Jake's an excellent choice, and he is all over this. And it's hard to predict what's going to happen anywhere. It's really hard to predict what's going to happen in DC. I was at a conference in November where a very senior, well-placed congressman said to the room that he is absolutely 100% certain the Clarity Act will pass by the end of the year, by the end of 2025. And here we are. So that's what 100% certainty means in Washington, D.C. But, whatever gets passed, even if nothing gets passed, whatever happens with the SEC and the CFTC, and a lot will happen there. having a competent team on the ground specifically worrying about Hyperliquid was the right decision.
Yeah.
And I think it's tokens well spent.
Yeah, I asked that because you laid out the bear case, and I think there's a couple of like pretty clear risks to this thesis. One being regulatory. Competition, I think, in this space is less. There are some other really solid perp sexes, but I think this is going to follow like a 40, 30, 20 kind of dynamic, or maybe even 40, 20, 20, something like that as far as volumes and kind of how that scales, maybe even more skewed in terms of Hyperliquid's favor in the power law or not. Is there any other tail risks that you have in mind for investors here who are holding Hyperliquid and looking at this and trying to understand just really everything that they need to know on the risk side?
Look, when it comes to risks, I'm a private equity guy. I'm very good at putting together risk sections of investment memos. You can come up with a million
endless risks.
Like,
right?
It's endless, exactly. Like this is a technology business.
Yeah.
This is a technology business that's built for 200,000 transactions a second.
Yeah.
The company has 12 employees, and 6 of them or 7 of them on the development side. Like things can go wrong. And I'm not looking to like freak anybody out here, but of course there are risks. Like this is equity style investing, where you think you're getting equity like upside. It's not a good government bond.
Yeah.
So there's definitely risks, and it's impossible to predict the future. But we think with a lot of work and a lot of thought and comparing a lot of things we've done in the past, we think the upside versus the downside here is just a really good thing. I didn't mention this before. Our firm is a bit over 10 years old. We've done close to 20 deals. I spent 15 years before this as the first employee at JC Flowers & Co., the private equity firm. I've done a bunch of many deals there. I've only done one thing in crypto before this, which was Circle. We invested in that in the sort of early 20s. We were the SPAC that was going to take them public. That didn't get done, obviously. Thank you, Gary Gensler.
Yeah.
But we got a sort of consolation prize by investing along the way.
Nice.
I bought some Bitcoin in like 2015 personally.
Yeah.
I should have bought more.
Yeah.
In case you didn't know that.
Yeah.
But the point is the vast majority of my experience and Atlas's experience is not on the crypto side, it's the TradFi side.
Right.
And I think that's part of what when I told you we partnered with Paradigm, that's part of what I think part of the attraction and was between us. I think they wanted this to sort of look and feel like TradFi. And I think a big part of our job as the DAT on Hyperliquid is to be sort of spreading this gospel, not just to guys like you and your viewers who are all probably pretty crypto knowledgeable, but we're talking to people all the time. I mean, literally, I had 3 of these this week with sort of investment banker types all over the place, senior people. Let me tell you about Hyperliquid. They've never heard of it. They have no idea. Let me tell you what a perp is. They've never heard of it. They have no idea. And that is a big part of our job.
Yeah. The explanation of a perp is something that I guess I didn't anticipate just being so. I was trading perps in 2017. Just like, you know what I mean? Just what is the question?
You know who invented perps?
Arthur Hayes.
Well, he invented crypto perps. Do you know who invented the concept of an actual perp? As far as I understand it, and I think I learned this from Wikipedia, it was Bob Schiller, who is a professor at Yale. I took his class in the spring of 1995 when I was a senior. He's the one that coined the phrase irrational exuberance.
Really?
Yeah. And he came up with that idea, obviously not about crypto in the 90s.
Yeah.
It was about, but an idea of sort of less liquid but priceable assets to be able to trade liquid and leverageable markets. And I think the idea kind of sat on a shelf until, as far as I know, Arthur Hayes picked it up and said, I have an idea. It's pretty cool.
Yeah. Is the questions that you field from these kind of more institutional types, are they very much like what's the revenue, what's the fees, what's the business? Is it like who's behind it? Is it like what are the main questions?
It's all the above.
Yeah.
It's all the above.
Yeah.
But generally speaking, I'll start the conversation by saying Hyperliquid's a group of people. It had been 11 people that just went to 12 recently. They've never taken any third-party capital. They've been around for just over 3 years, and there's close to $1 billion of free cash flow coming out of this thing. Yeah. Like, that's really impressive. If you just stop right there, That'll generally get people's attention.
Yeah.
And then you unpeel the lots of things to unpeel and why we're here and why we did this and what it all means and what the future is. And again, it's an easier conversation having now that the Wall Street Journal and Bloomberg and the FT have reported on things like oil and Hyperliquid. Like now there's at least someone says, oh yeah, I did hear about that. I read that over the weekend or whatever. Tell me more about it.
Yeah.
And again, it's the same point I made before. It's a show me kind of market.
Right.
You know, the people have heard a lot of cool stuff that crypto is going to do to revolutionize the world. Some of it's happened. A lot of it hasn't happened yet. Some of it might still happen, but people want to see it, you know, in real life.
And so are these investors looking to buy like per, or are they like going more direct and like
I'd like them to buy per.
I mean, shit. Who wouldn't, right?
Generally speaking, these are people. Look, it's all the above. Our job, you know, we're talking, you know, we're talking at conferences and not just crypto conferences. We want to be in front of sort of equity, financial services conferences. We're doing stuff in the press. We're talking to lots of investors. We get on investor calls, and there's a wide range of knowledge here. And the investors we talk to who are super crypto native and are already trading on a DEX, like they just want to hear our perspective, and maybe they'll buy some more hype, or maybe they already own hype or whatever. But we talk to hedge funds that are very sophisticated, equity long short guys that have never bought crypto before, that you know, would probably pretty easily be able to set up an account at Coinbase or wherever to be able to buy crypto. But the idea of them buying something on a DEX is just not happening anytime soon.
Yeah.
And you know, when they look at buying our stock, you know, at or around 1 times MNAV, they're like, well, that's an easy decision. Yeah. Like I can make my compliance guy nuts for the next 4 weeks, or I can pay, you know, 1 times MNAV for your stock. That's an easy choice.
Yeah. Question on the stock side, on the actual company side. As you mentioned, a lot of these other treasury companies are kind of open up new lines of business or like adjacent kind of quests in an effort to effectively figure out how to rectify the situation of kind of buying the top, more or less. Yeah. Are you guys doing anything other than just buying Hyperliquid, holding it, using the spare cash to buy more, and just focusing on kind of like spreading the gospel? Like, is there anything else?
Yes.
Are you guys staking it? Like, what's the?
Yeah. So the answer is definitely yes.
Okay.
I would say though that when you tell crypto people this stuff, and you tell crypto people we're going to do things, you know, if you tell it to them on a Thursday, they expect to see it up and running the following Monday. Exactly. I will tell you, we are thinking about lots of things. I'll give you some examples. We are thinking about it in my own TradFi timing. You know, we're careful people. Effectively earning more yield than the stake. So we are staking, by the way. We're staking more or less 100% of our.
That's around 2% yield or something.
A little more, but not much more. We're staking 100% of it, or awfully close to 100% of it, and that is a no-brainer. The question is, what can we be doing with our tokens to be getting that yield higher than just a straight staking yield? We're looking at a lot of things. One thing we've talked about publicly already is I think it's very natural for us to be a validator ourselves on the Hyperliquid network. So we're in the process of figuring that out, and we'll do that. That's not going to move the needle a lot. You don't make lots and lots of money being a validator. You make some money being a validator. But there's lots of other ways we're looking at. We had, I don't know, 3 or 4 meetings along those lines today at the conference. You know, today's the Blockworks conference in New York. And you know, if we announce, I don't know, 2 or 3 of those sort of things in 2026, I'll be happy. I don't have to announce 10 of them by Monday to be happy, and that's kind of how I feel. So we're gonna work hard to get that yield above that, you know, staking yield level. You know, when you're dealing with an underlying token that's 100% give or take volatility, you know, sometimes people say, well, why even bother? What's the difference whether you're earning 2% or 4%? I think it matters. I think in the long run, in the long term, you know, it matters to your MNAV. And I think our job, among other things, is to get that MNAV up over time. You know, we were sort of solidly trading at kind of 1.1 a couple of weeks ago. We've come down a little bit. We can all speculate why. We're probably at about 1.0 right now, last I checked. You know, we sort of dance on the head of a pin a little bit between 1.0 and 1.1, but that's the life. That's the job we've chosen. But anyway, the answer is yes. And obviously, if you can generate a lot more yield, you're going to trade at a much bigger premium.
There's always going to be more risks. I mean, the typical way to go get more yield is going to be going into smart contracts on
Yeah.
HyperEVM. Then there is a whole nother level there of
Yeah.
teams. Because right now, the company and your entire thesis is structured around 12 people, right? And other, subsidiaries and custodies and firms and
Yes.
accounting and all the sort. But like, if there's like a 12-person thesis here, you start to expand into other protocols, other teams. The risks grow quickly.
Yeah, and by the way, it's not totally fair to say it's 12 people. I mean, technically it's 12 people. When I saw Jeff, when he was speaking at Token back in Singapore in whatever that was, September, October, someone asked him, like, how can you have a company or a group with so few people? And his answer was that they made the conscious decision to sort of have other people in the ecosystem, as you just said, doing different things. And his example was, Unit brought spot trading onto Hyperliquid,
Yeah.
right? And he said, if this was a regular company, we would have a division called the spot division or whatever,
Yeah, of course.
and it would be another 20 people or 15 people, and they'd be the spot people, and then their company would grow and grow and grow. He made the conscious and I think very wise decision to have the ecosystem doing lots of stuff, not just him. I mean, it's an extremely, in my opinion, humble decision he made, which is they're going to stick to what they're really good at. I think he likes himself being behind that computer, doing a lot of the coding and developing himself. And he's going to allow the ecosystem to build, and he doesn't need to build an empire. He needs to build a really high-functioning platform and blockchain that he's personally in the middle of. Like, every line of code, everything that it does.
Yeah. David Schamis, looking forward to continuing the conversation in the future, 6 months, a year from now, see where we're at, see where PER's at, see where Hyperliquid's at, see where just the general crypto market kind of revitalization. I think the 4-year cycle is intact from the top, but I anticipate it to be a little shorter. I anticipate risk to come back slightly quicker, not that much quicker, but yet to see. Thanks for joining.
Thanks
and being
for
a part
having
of the
me.
Empire
This was really
State Building
fun.
here.
Thanks a
Cheers,
lot.
buddy.
Thank you.
Ladies and gentlemen, that wraps us today. Thanks for being a part of the show. We will see you guys tomorrow live from the Nest. See you guys then.